main session, which is accelerating ideas into business with Matt again. So please welcome.
Okay. All right. All right. Okay. We'll make this session a bit more interactive. So I'll prompt you some more and think of any questions or you want to ask this session, last session. So this part is really the introduction of some tools that are commonly used and some concepts that need to be considered if you have an idea and you want to try to bring it into a business. And to recap, last section was kind of like, here's all the stuff companies are doing. Here are some of the big trends looking from the top down. This is like, we have an idea. Does it make sense to look bottom up and connect those together? Okay. So we'll talk about some startup frameworks and kind of some of the what's called a go-to-market strategy, as well as kind of thinking about scaling and piloting and et cetera. But some stuff may be pushed till tomorrow because we're going to do a deep dive into the accelerator curriculum tomorrow. So the biggest thing, if you have an idea and you want to see if it's going to be successful, is to assess the market opportunity. Okay. So who's going to buy it, who's going to supply it, who the competitors are, what are the market conditions, what are the enabling conditions. And you do this with desk research, right? So publicly available data, privately available data. You do it by interviewing companies and asking people, would you pay for this? How much would you pay for this? Does this solve your problem? What else could solve your problem? Is this actually your problem? And you research and you ask people. And you can also just survey people, send emails. So the combination of desk research, emails, interviews, putting that all together will help you assess if there is an actual market for your idea. Why does a market matter? Does anyone have any ideas why it would matter to do this work before you launch a business?
Anyone?
There you go. You want to sell your product. Thank you. Great answer. Exactly right. 100%. Because businesses sell products. And if there's not a market for your product, you don't have a business, no matter how cool your idea is. So many entrepreneurs, so many academics, they're fascinated by these topics. They say the world needs this. You don't tell the world what it needs. The world is asking for what it needs. You just have to listen and then design a solution for. There may be differences on what you think is cool and what you think people need and what people actually need. Okay, same thing with relationships, with friendships. People tell you what they want. You just have to listen and then respond and behave to accommodate that. So this is a market, right? When we say the market, this is like a hypothetical market for one product in could be in a geography or for the globe. Okay, so I'm going to run through this. In the top part, this laser doesn't work. In the top part, these are like, let's say the market conditions that are happening outside of the product sale itself. So is there any standards of trade between countries? What is the local macroeconomic policies we were discussing? Business, what kind of regulations exist? What kind of gender norms exist? Gender norms are important, right? Because if you have a woman CEO in a country that is a little bit patriarchal, then they get less market, right? Um, the what is the taxing like? What is the contracts like? Legal system? What's corruption like? Right? And just trends that are happening, right? Companies want greener stuff or whatever. Okay. So all that stuff is happening independent of the product, right? So then the product comes on the market. Um, you can export it, you can sell it domestically, you can sell it to big customers, you can wholesale it, you can sell it to processors, you can sell it to traders. There's certain niche markets that, high value, low volume. There's local markets, there's processors, there's traders, and then there's the people that actually make it. So your idea, whatever it is, who is your customer? And the biggest mistake that first time entrepreneurs make, whether they're scientists or business people, is they're trying to sell to all these people. And they're trying to sell multiple things to all of these people. And that's not how it works, right? You have to pick one customer in one market and sell it to them. Oh, yeah, go ahead.
So we only want to replace the existing product. So there is our customer, and we give them the lower price with the same specification. Can we make
Yes.
it simple?
Yes. Yeah, you can. You can. And it is simple, but that's, let's say, one level down. Okay. Because if I'm selling a t shirt or I'm selling a liter of petrol, who's the customer, right? In both cases, it's a consumer, right? But also depends on what your product is, right? And that's something that the accelerator work on. Is your process selling and creating a product like a teacup or a bar of soap? Is it a new type of chemical process that you license, right? Like a lot of the work of an accelerator is just figuring out what the product is in the first place, and then figuring out who you want to sell to. Because, like, for example, a greener product, we might have a greener carpet, right? But we might say that maybe it doesn't make sense to sell to the consumer because it's 10% more expensive. So I'm not going to sell my product to them. I'm going to sell it wholesale to an institutional customer that will pay 10% more because it's cheaper for them to buy carbon negative carpet than it is to offset and buy new cars for their entire company. So again, that's why we do this market work, is to figure out who exactly we want to sell it to, what their problems are, and what we're even selling to them to see if it actually solves the problem they currently have. And a lot of the times businesses fail because they're selling a product which they think is a solution to someone's problem, but it isn't. Okay. And in like in the Silicon Valley mindset, you have this expression called a hair on fire problem. Okay. So what does that mean? Hopefully no one in here has caught their hair on fire. Okay. But you could imagine if it was on fire, you would probably want to put it out, right? That would be your biggest problem you have while that's happening. So you'll, anything you see that you could possibly use to put it out, you'll try, right? Like you could maybe use this tablecloth, maybe this water, right? But some things really wouldn't work, right? But you could imagine when you have a very urgent problem, you would take a wide range of potential solutions if it can help, right? However, like if my hair's on fire, well, and my friend walks up to me and they say, "Here's some water, put it out." I'm like, "Hey, that's exactly what I needed. Thank you. I'll pay you $1,000, right, or whatever." Or hopefully it's free because it's your friend. But like if my friend comes up to me and is like, "Hey, I know your hair's on fire. Seems like a really big problem, but let me tell you why you should plant a garden. You should plant a garden because it reduces CO2 and it helps regenerate the soil and it creates bio-based feedstocks and it reduces your food bills." I'm like, all that stuff is cool. And I kind of want that, but that's not my problem right now. It's not it at all. And a lot of businesses fail because instead of helping people put out the fire, they're trying to convince them to plant a garden, right? So think about that. It takes empathy and listening to actually hear what people's problems are rather than assuming that you know. And the assumption of knowing before asking and before listening is the reason why most businesses fail. Okay. It's also why a lot of other types of human interactions don't work, like politics or family problems and stuff, right? Listen to people and be empathetic. Yeah.
I just wanted to add to this. I think this is a fantastic point that Matt is making. I mean, we constantly see new green processes that are not implemented because the plants have been built for 40 years and we're year 10 of the plant and no one is going to destroy that plant and build a new one. But in countries where new plants are built, this is an opportunity to implement a green technology. So if you approach a business and you say, okay, what are you doing? I'm building a new plant. That's an angle through which you could say, look at this process. It's actually going to save you on the recycling of on the treatment of the waste, on the emissions, on this, on that, and present this as a business case as opposed to simply a green chemistry case. You have a much better angle. And again, here you enter this by saying, you're building a new plant. This is an opportunity. So really viewing this from the angle of the business and not from your perspective of just trying to push your own process. And this is really something that is a problem for researchers in particular, because we often fail to see that perspective. We have a process, we want to push it out. It's always pushing it out, pushing it out, pushing it out. But it's like, if you're not talking to the right person, it's never going to be implemented for sure. So listen to the business side of things, because otherwise nothing will work for sure.
Great point. Any other discussions or reflections on, let's say, customer empathy or listening, business-driven innovation? No. Okay. Well, keep it up. We'll keep talking about it. Yeah, I can't emphasize it. If you ever want to start a business, don't assume you know. Okay? Just don't assume you know the answer. So much money has been wasted, and it's just, yeah, we don't have time for something like that. Yeah, just really stick that in. I wasted a lot of time thinking I knew what people needed. Okay. So, all right. How do we, once we complete the research of a market assessment, what does it look like? This is one example. This is called a competitor. Typically, this is called a 2x2 competitor matrix. I don't know. A lot of time, venture capitalists like make up words or make up phrases that don't really make sense. They call this a 2x2. Basically, you have an x-axis and a y-axis, and it's kind of really subjective, right? And like, here's like the percent market share, and here's how satisfied people are, and here's all my competitors, and here I am, right? So it's a way to let someone rapidly understand on two different variables how you differentiate, how you're different from the existing competitors on the market. This is okay. This is pretty common. This is a much better example. This is what's called a competitor matrix. But basically, you have your company, Google, right? Here's some of your competitors: Bing, Baidu, Yahoo, and Yandex. I don't know what Yandex is. Does anyone know? I've been asking everyone. Anyway, it's on this. They're not a very good competitor. But so basically, why I like this one is, again, it really is kind of funny, because this idea of chemical leasing is articulated in the business world as something different, which is called jobs to be done. And it's actually a pretty common framework that's used at some of the leading business schools in the world. It's a really good way to look at things. So jobs to be done framework, really good. If you're curious, take a look. But these are the jobs to be done by your product, right? So I want to show more than 8 file types, right? Check. My other competitors can do that, but not everyone. Or I want my load time to be less than 1 second. You see, so you don't really care who the competitor is, what the product is. You care about the particular job that the company or the product is offering you, and then comparing based on that. This is like the type of market research you would typically pay for, because startups can't typically do this time. It could be like an academic study, but typically you would buy something like this. This is a market map for a particular sector, something in the medical sector. You have the different, so let's say this is like medical imagery. as a sector, you have like subsectors of that medical industry or imagery sector: in vitro diagnostics, cardiology, orthopedics, etc. Subsectors. And then these are the different players and their revenue. So you have Roche is 9 billion. They have roughly 20% market, and all the smaller players. And then you have the total size of the market here, which is 375 billion. So when you're creating an idea, right, like the market is growing, maybe it's growing 10% a year. So it's 37 billion a year. These are growing. That's new value, right? So when you come in, you're either going to displace some of those people, right? Maybe you take 1% out of GE and you get 15 million in revenue, or you're going to capture some of the growing market. But again, these people are going to be going after it too. So how are you different than all of these people? And how big is your market? How big is your sector? How big is your subsector? Okay, good stuff. Questions on market maps, market analysis? Yeah.
Product from the local markets. The products from comes from local market. Let's say industry, yeah. Uh, Villagers do something that I say that they can uh, create like cleaning soap like that and from the natural materials in and locally place
Mhm.
agent like that, and they want to upgrade or improve their product to another markets, or we know to improve to export market, for example.
Yeah.
So there are any steps or sequence to get there,
Yeah. I mean, you have to pick what market you're trying to sell it to.
or just get investor of
Well,
the region?
you probably won't be able to get investors. Okay, most people get asked for investors way too early and they won't get it and it's a waste of time. Like what matters is increasing the revenue and then the investors will come. But well, I'll talk about investor engagement later on, but for that particular example, like who are they selling it to? Are they selling it to individuals between the ages of 25 to 35 with this income bracket in these geographies, or are they exporting it to these companies or these countries? Like figuring out who you want to sell and how big that market is, and then how you're going to communicate to the people in your market, which I'll talk a little bit about shortly. Okay, other questions on markets? Market maps, customers, segments, subsegments. This is the moment. This was the moment I was fearing. I watched all the other people. Beep.
Mungkin kalau Bapak Ibu ada yang mau bertanya dalam bahasa Indonesia.
Okay. Oh, now it's working. Okay, great. Thank you. Okay, so
Ya, dipersilahkan. I don't think there's for
okay.
now.
All right, there will be after this. Okay. So, your question was kind of like, how do we sell to these people? Let's say you've picked a market. I want to sell to, mid-sized chemical companies in the on Java, right? Okay, how am I going to communicate with them as my business? Okay, first you have to understand what your business is, right? So, what is your business model? Okay, there's a tool called the Business Model Canvas, a very effective tool to use to do this. Next, you have to then figure out what is your value proposition. Okay, so what is the customer pain point and what is their unmet need that you are solving with your product? All right. And it should address, because we're green chemistry, it's social impact, address economic, environmental, and social benefits. But again, notice how your value proposition is the customer's pain points and their unmet need. Okay. Right now, my pain point is not, I need a microphone. Right. So if you come and try to sell me a microphone right now, not really my problem. I don't want to buy it. Right. So again, taking the lens of what the customer needs is how you actually design a value proposition. And the value proposition is like, my business does this for this person, right? Through this, right? Customer explaining how it helps them. And then you have to think about your revenue streams. Okay. How are you making money? When are you going to break even? What type of money do you need to get there? All right. This is a nice picture of the business model canvas. Typically, you can, if you want to think about exploring a business idea, you can print these out. They're one page. There's very good templates online called the business model canvas you can fill out, and good guidance there too. So this is like your business on one page. Okay. So let's start in the middle with this your value proposition. I create organic soaps that I sell to retail customers who care about climate. That's my value proposition. What I do is I buy soap from villagers. I package it and I distribute it to retail stores in the urban areas of uh, Southeast Asia. In order to do that, I need talent. I need a number of villagers. I need to have contracts that actually let me, get it at a certain price, and I need to have people that'll buy it at a certain price, and I have to be able to distribute it. The cost structure, I charge about 50,000 rupiah per bar, and I buy it for about 30,000. My partners are the villagers and the stores, but also the relationships with the transport and distribution. I do this direct to consumer in physical stores. My customer segments, like I said, 18 to 25-year-olds who won't care about the environment. and and then the value proposition, I'm engaging my customer. I'm building a relationship with them so that then they buy it every month, right? So my revenue stream, it's a one-time sale, but then how I make money in the long run is I have a subscription service that they can pay me 25,000 per month, and I send them a bar of soap every month to their house. Okay, that's like a business model. There's a value proposition. You see all of these components. Um, Doing that work is how you figure out what it is. And you could imagine for a bar of soap or for a chemical or a process, you could come up with 10, 20, 50 different versions of these, right? And you will if you create a business. The first one won't work. You'll have to do it 20 or 30 times, test it out, get feedback from your customers, and then change it a little bit until you find something that sticks, and then you scale up what sticks. But no one in the room is that good that they'll fill it out once and then become $100 million company. They'll probably fill it out 50 or 100 times, and maybe the 80th time will be something that sticks, and you'll make 10, 20 million in revenue over a few years. Okay. So make sure you are going around and learning and adapting. And what's interesting too is, let's say you have a founding team with 2 or 3 people, right? Maybe you find a business student to pair with and you like start to launch a company. Do the exercise where you sit in a room together, you both print out one business model canvas each, and you say, let's fill this out and let's compare the answers. And I've done this a number of times with founding teams. And what's really funny is each of the founders think they're running a different business than their partners. Okay. And sometimes it's dramatically different. Okay. So it's also a very good tool to align on what you're actually doing with your business partner, identify the differences, and then keep it a little tighter. All right. So components of a business plan. Typically, a business plan is what people ask for. Sometimes it's a slide deck, but in general, a business plan combines like a one-page summary of what your business are, who your customers are, kind of like that business model canvas, but nicely formatted and easily understandable. You have the market analysis, right, which describes how big of a market there is. And then you have your operational and your execution plan to say, here's how I'm going to capture that market, and here's how much money I think I can make. That's a business plan, right? A lot of work that goes in there. And again, if you don't have all this stuff done, you're not even going to get a meeting with an investor, much less money. Okay. So a lot of work you have to do, months and months and months and months and years of work before you can get any investment. You might be able to get a grant, but even a grant, you got to kind of know all this stuff already too. Uh, and that's called investment readiness. Okay, how do you develop investment readiness and whatnot? You basically the terms you need, if you want to think about it, I'm not going to go deep into it today, but you would have what's called a data room. Okay. So if you look up startup data room, you'll find all of the documentation that you need to have in order to actually get investment. Okay. Your incorporation, your financial model, your tax returns, your contracts, any of your IPs, any technical information, all your pitch decks, any every single piece of information you could think about a company, all nicely labeled in clear folders that is explained. And if you don't have all that stuff, you're not going to get any investment. So, like, first time entrepreneurs always think they can get money like really early on. Not going to happen. Probably not going to get money for 1 or 2 years. And you got to do a lot of work before you can. So, it's very important to focus on how can I just sell a product? If I can sell a product, then I can have some revenue. Then it's a much different conversation. Things become real and less abstract. Okay, in the sake of discussion, I'm not going to talk about how to scale up a green chemistry company, but I really kind of want to talk about this, which is a strategic roadmap. So if you want to raise money, people will say, okay, that's a cool idea. Like, I like villager created soap, or I like using drones for mapping tribal land boundaries. Like, that's cool. It aligns with my fund's philosophy, and my investors want to support these types of activities. If I give you $100,000, what are you going to do with it? Okay, who's thinking about starting a business right now? Go, let's have a brave volunteer. Come on, someone. I'll just stand here and keep asking. So maybe just pretend you want to. Yeah? Someone? Well, you've asked a few one. Let's get one of these quiet people. Someone over here that hasn't said anything. Don't make me call on someone random because it's going to be okay. Thank you. Thank you. Brave.
If you give me $100,
Yeah. $100,000.
okay,
Yeah.
100,000
100,000.
is around
Yeah. What would you do with it?
2,5 M.
Yeah. To make
Uh,
the biodegradable catalyst. What would you use that money for?
yeah, actually, I have already some small business,
Okay.
but it's about the organic soap.
Okay.
Yeah, if I have that kind of the money,
Yeah.
maybe I will spread to the community.
Okay.
Yeah, so I want to actually my dream is have some community,
Yeah.
and so we spread to the mom and then to the woman and to the society about the how I means the uh organics cosmetic, and also to the skincare product.
Okay.
Yeah,
So you would create two new product lines.
yeah, to the new product lines.
Yeah. Okay. All right. So that's great. That's cool. Not detailed enough for me to take my to invest in, and the reason is because that's not actually clear enough, right? Investors want a lot of clarity. Okay, and that's where something like this comes in. So let's use your example. Thank you for giving me an example. Okay, so first you need milestones, and you need milestones by quarter. Okay, so at the end of 2024, we will have identified 5 different types of cosmetics that could potentially be created by our company. By the end of first quarter 2025, we'll have picked one of those companies and done a market assessment by them. At the end of the second quarter, we will then launch that product into the market. And by the end of third quarter, we will sell 20 to $20,000 worth of that product. Okay, see how it's a little different, right? So now, okay, the investor's like, okay, that's clear. You have a good operational plan. I like that. But then you still need to figure out how you're going to actually do that personally, right? You've got the product, right? So you got to research the different chemicals. You have to do the formulations. You have to assess the supply chain. You got to test for the 12 principles. You got to do all that stuff, right? Then on the sales, you have to say, okay, who's my customer? I have to interview them, right? I have to identify maybe some potential customers, and then I have to develop sales material for them, and then I have to email them, right? Then I have to set up a website to sell it to them, right? Or whatever. And all that stuff, you can't do the one thing before the other, right? There's a dependency. And then, okay, well, I have to hire some people, so I need to design a job description, and then I have to interview people, post a job, and then I have to interview people, right? All that stuff has to happen so you can hit your milestones so that you can actually deliver on that promise of why that investor put money in, right? So that type of work you need to have before you ask for money. A lot of people ask for money and they say, well, I want to do this stuff. How are you going to do it? I don't know. I'll figure it out later, right? Like if I asked Lars for $100,000, be like, what are you doing with it? I'd be like, well, I don't know. I'll figure it out later, and maybe you'll get your money back. Maybe you won't. I don't know, right? Like, probably wouldn't do it, right? But there's kind of a belief, and I don't think it's really spoken out loud, but the belief is like we're smarter than investors, so they should just give us money because we know how to spend their money better than they do, right? And I'll tell you, in this world, there's no shortage of people with great ideas on how to spend other people's money, right? But a real good test is to say, if this was my money, would I do this? And if the answer is no, then either make a better plan or come up with a different strategy, right? But that's a good test. All right. Okay. Do you have a question? Oh, I saw you grab the mic. Okay. Yep.
Yeah. Maybe before this slide, supply chains management, the supply chains management. Okay,
Okay. This or
yeah, or channels like this,
yeah. Uh-huh.
business
Yeah.
model.
Yeah.
Indonesia has problems about the logistic supply chain the channel because we are many island. We have many
Yeah.
islands and needs costly for the logistic.
Yeah.
Yeah, so it's more need a standard cost for that.
Yeah, or maybe it's just not a good business. Okay, like not every good idea should be a good business. Okay, which is not to come on too hard, but like as people that come up with ideas, we think like not every beautiful idea deserves to be a business or deserves to get money. And that's a hard thing to realize, okay, in general. Like if your business is based on shipping super heavy things around Indonesia that have a really low value, probably not like gonna be a profitable business, period, right? However, maybe there's a different angle, right? Like if you're making soap and you're like, I want to sell all this soap, maybe instead of making it in one place and shipping it to another place, you develop a really good recipe and then you like license it out to different areas, and then and you create it on each island, and then you sell it on each island, and then you basically pool all of that money together in one company. Now you don't even have the problem of supply costs, right? So a lot of it is just like coming up with a different angle and not being so attached to your idea. People get like fanatical, right? Like this idea is going to change the world and I just need to figure out how it's going to work. Not every reaction works, right? There's a lot of reactions that work, right? That are, oh, I hope I say it right, that are uh, uh, Gibbs that take that and the that have net energy input negative enthalpy or something delta. Wasn't it Gibbs free energy? You know what I'm saying? That take more energy than they actually release. What is that? Endothermic. Yeah. Okay. So it's endothermic, right? There's a lot of businesses that are like that, right? Endothermic, right? You can put in so much money and you never actually get over the hill to make the reaction, right? And but there, but we know that there are catalysts and there are shortcuts. I know they're making fun of me because Gibbs, who invented free energy, was actually buried at Yale, I think.
Kinetics with thermodynamics.
Okay, yes. Okay, but I'm trying to build the metaphor for the chemist. Okay. You have your activation energy, right? You have your activation energy to do a reaction.
Yeah, so that's kinetics, right?
Okay.
So you have your
Okay.
activation energy. You
Yeah.
need to give energy to go to the other side.
Yes, exactly.
Yeah.
That energy in business is money, right?
Yeah.
And there's catalysts you can use.
Yeah.
There's different reactions you can go,
Yeah.
right? Like you might start like there's not just one reaction path.
So here is your analogy. You
Yeah.
need money to make an investment at the
Yep.
beginning, and that's your kinetic barrier,
Yes.
your activation energy.
Yes.
And then on the other side, you
Yeah.
hope to be going down further down
Yes.
in an overall exothermic process,
Yes.
so that you have a return on the money because
Yes.
you will have more money than where you started from.
It's energetically favorable.
So it's
reaction.
energetically favorable. And
Yes.
at that point, all the money you make will feed the next step of going up the hill.
Exactly. And again, let's just continue with this metaphor, right? Because it's important. And I think it's something everyone in the room understands is that you need to have a certain amount of energy to roll over the hill. Sometimes the hill's too big. So then we can use mechanochemistry. Maybe we press it together and change it a little bit, right? Maybe we heat it up. There's different ways to adjust that. And that adjustment, that search for a reaction is the exact same mental process as designing a business model. Again, a business model is a reaction, right? That results in net positive money, right? And don't get too focused on one reaction. You can get obsessed with chitosan, right? That's fine, but there's like 500,000 different ways you could research it and design reactions around it. Don't just stick with one. Okay, you have to be really fluid around business model in order to actually be successful. Okay, I like that one. I'll work on the endothermic thing. We can work on that. We'll work on that. All right, so let's talk about how you grow, which I think is some of the questions. Okay, um, something that I learned when I was an early stage entrepreneur was I was looking up and being like, wow, I really want to make my first sale. How am I going to make my first sale? And it was like up at the top of this giant mountain, right? And I was like, oh, that looks so far away. And I'm walking up and I'm finally, oh my God, I made it. I made my first sale. And then I'm like, okay, now I need to make 100 sales, right? It was so hard to make my first sale, but now it feels super easy that I did that. And then I look at my 100 sales and it's like this other giant mountain. It's really even taller. Okay. I have to go all the way down, all the way up. That's how entrepreneurship is. Okay. Whatever challenge you think will look so easy looking back and so immensely difficult looking forward on it. And that's called scaling, right? And growth, right? And you do that in different ways. And the most important thing, I think, when you're thinking about scaling, this is a good diagram. It doesn't capture everything, but it's big elements, which is the people. People help you scale. Okay. So who's your co-founder? Who are your first employees? Okay. How do you make them high performance? How do you have a positive company culture that helps people stay motivated and excited and come to work even when it's really hard? People are your biggest asset. Investors don't invest in your business. They will later on, okay? Much later on. But like your first 5 or 10 investors in a new company are investing in you and your co-founder, not your business idea, because they know you're going to try 20 different reactions before you find the one that works. They're not investing in that reaction, they're investing in you. So you really got to think about how you have a relationship and what type of culture and interactions, how you're helping people grow and how you're empowering people to want to work hard and be excited about what they do. Then you got to think about your strategy. Why are you doing this? Right? What is the rationale? When we're creating soap that's made by villagers, what is like the end vision actually? Is it that everyone has soap made by villagers, or is it like there's some sort of equal society where people can live in remote areas and still generate enough wealth to meet all of their needs, right? Like, what is the real vision that's guiding you? And again, is it about the product? Is it some particular outcome? Is it some sort of set of activities? What does it look when you are wildly successful as a company? Let's say your business made $500 million a year. What would the world look like at that point? And that's your vision that you need to remind yourself of all the time, and all of your staff, because that's what's keeping you going, navigating you in difficult times. Execution. My little blurb on execution is, I just look at Lars because he's heard this a few times. So he's like, how's it going to go over this time? Um, First, I can always tell the difference between a first time entrepreneur and a second time entrepreneur. First time entrepreneur says, I can't tell you how that works. It's a secret. It's proprietary. It's my secret. And if I tell anyone, then they're going to steal my idea. I even heard it on stage, right? And sometimes that might make sense. But in general, right, if anything's published, there's no point in hiding it, first off. And second, like, the idea isn't what matters. It's not. There's a lot of good ideas in this room that could make a lot of money. All right. It's a little different in academia. Sometimes we discover things that didn't exist. Okay. But in business, okay, you know what's a great idea for a company? Has anyone ever had, I'm sure they've heard their friends or their family say, oh, this would be a great idea for a business or something, right? Okay, it'd be great if I made an electric car company. That's like a great business. Let's do that. That idea is cheap, it's easy to say. What's hard about that is actually executing, building it, hiring the team, saving money, getting money, selling the products, navigating the regulations. It's not the idea, right? There's no point in saying, oh, it's an idea. I want to keep bio-based leather from palm oil because I'm not going to tell anyone, because if I tell anyone, they're going to steal it, right? Second time entrepreneur will tell you exactly what they're doing. Okay, obviously there's some proprietary stuff you need to sign, but like 90% of the stuff will be totally, they'll tell anyone, because they know that the idea isn't the hard part. The real hard part is executing every day towards your quarterly milestones. How do you stay focused? How do you meet your targets? That's the hard part. It's so, and then of course the last part is cash, right? So raising money, but also spending money, right? How do you spend money? When do you spend money? When do you get paid? How long does it take you to get paid? How do you turn the dial down and spend less money? How long do you have before you have to raise money? This is a constant battle of how you manage your cash. Okay, so some of the challenges I've just summarized is regulation. Regulation we talked about, right? The tough part about regulation is there's no discount if you're a company with no money. Okay, you want to sell into Europe, you have to comply with REACH. They don't care if you're making your stuff from small villages in Indonesia. Doesn't matter. You still got to file with the CNL. You still got to have an MSDS or SDS. That might cost a lot of money. You might not have it. Your business might not work. You need a new market, right? There's no discount. There's no shortcut for regulatory compliance. Everyone has to do it. Second is funding, right? Mostly around investments. But again, people want to get an investment before you have revenue. You're not going to get an investment before you have a customer. You might get a grant. You'll never get an investor unless you're super amazing, which I hope some or all of you are. But it's also super rare. And in general, you shouldn't even try to make any investor pitches until you have at least 10,000 US in revenue minimum, but most likely closer to 100K. At that point, you can actually start raising checks 50K or 100K in size. And by K I mean thousand. So yeah, 10,000 in revenue. Now you could actually start talking to real investors. Before then, it's going to be grants, accelerators, and your friends and family. But don't go to serious investors before you get, honestly, 10,000, 50,000, 100,000. Then you can start getting checks that are like 50,000 in size. So just to calibrate expectations when you're thinking about businesses. talked about this a little bit on the corporate level and the individual, which is how do you educate the customer to adopt your products? How do you make people aware of what you do? And how do you make people actually buy it? So, um, talking about teams, okay, how do you build a good team? Maybe you hire your first person, maybe you have a few people in the founding team. You want to allow people to basically have clear lanes of what they do and what they don't do. So you're the science guy, any decision on science, you do. You're the business guy, any decision on business, you do. I'll talk about it, I'll ask about it, but I'm not going to argue when you make the decision. Clear lanes of operations. Don't tie your shoelaces together. Um, Other things is to have a very clear vision and purpose and shared values, to basically uh, other things that are important. We talked about rituals, right? What is your ritual whenever you are going to do something big as a team? Do you all have a cup of tea? Do you bang on your chest? Do you shout? Do you, what do you do as a team, right? Like you look at a football team, they have these rituals before the games and it helps them work together. Similar thing within business, good to do. And then also what's important is that for the people that are parents in the room, your kids kind of copy what you do, right? If you argue with your partner, your kids will argue with their siblings. Same thing with founders and employees. Like if you have a founder, you have another business partner. If you are nice to each other, your company will, your staff will be nice to each other. If you interrupt each other, your staff will interrupt each other. They model the behaviors of the leaders. So be very mindful of the behaviors that you're doing. And the last part I would say is actually give people feedback, give them advice, tell them what worked well, tell them what didn't work well, because your first employee may be with you for 5 years, right? And like, although you might only have, 10,000 and like you might only have 4 or 5 employees, that first employee in 5 years might be managing 100 people, right? So you want to make sure you're training them, giving them feedback and autonomy so that they can actually scale up their business or your business. Ways to do this. Again, clear roles. I cannot mention this enough. Okay. Make sure people have very clear decision making. Who gets the final decision? How do we decide something? Okay. Are we gonna have what do I expect from you as my business partner? Right. If I call you, I want you to call me within 2 hours. If I text you, I want you to text me within 4 hours. Maybe, right? That's an expectation, right? A lot of businesses fail, one, because they're selling the wrong product to the wrong market and they're committed to something that will never work and don't pivot. But two, because the co-founders don't actually articulate and understand each other. They don't have clear roles. They don't talk about the expectations they want. And I will say that in dating and partnership, it's a very similar thing, right? If you don't communicate your expectations to the people you care about, you're probably going to get in arguments, right? So take the time to actually communicate what you expect, what you need, what you want, see if it aligns and come to common ground, so that you actually don't have, like, so you're not actually fighting about like unspoken expectations, which can really sink a company that doesn't have a lot of money and is under a lot of pressure. All right, I'm going to talk about financial modeling, but before I do, I want to pause for discussion. Team, execution, we'll wait on cash flow management, vision, values, team, culture.
Maybe from the business department, Pak Yanwar and Pak Reja, maybe.
Or anyone. If you want to ask an Indonesian, also fine. Someone that hasn't asked a question yet. I'm going to start picking on people, so hopefully someone volunteers. Oh, you're going to make me pick, huh? Quiet people. Okay. Suddenly quiet. You're talking.
it's more confirming what you mentioned before. Uh, I've I've heard this ideas of built in public. So like the second types of entrepreneur. So instead of closing their things, they build in public. They share. So I don't know. I mean,
Yeah, totally. Again, like I guarantee you, none of you will have like this crazy original idea that no one else in the world has had, right? Like, there's a lot of really, really smart people doing super cool stuff, like biodegradable catalysts, bio-based feedstock, value from waste. Um, all these things have been discussed, written about, thousands of papers, tens of thousands of businesses have tried, right? So again, be really open, and the more open you are, the more attractive you can be to potential staff, potential investors. If you're building, like, there's a lot of opportunities to do like partially open source models, or even developing like consortiums of different types of businesses that can work together, that may not be your customers, but together you can have strong market share. So again, think about how to expand this idea to really focus on operations and attracting partners, rather than thinking it's a bloody battle of trying to get the one investor and I can't let anyone know. Okay. Other questions? I'm going to start mic running, because I'm just going to start handing mics to people that haven't talked yet. So I'm just going to start going in order. Okay, who has a question? Someone over here? Yeah, thank you. Thank you. Oh, little trade off. Okay, great.
Yeah. We know that in triple bottom line, there are 3 points: people, profit, and planet.
Yeah.
And in terms of business, what roles of innovation and technology facilitating the transition, and how can company measure the effectiveness of their strategies in achieving both environmental and economic viability?
Yeah, it's a great question. Thank you. Thank you for being so brave. I hope other people follow your example. Okay. It's a great question. Triple bottom line is kind of like the old school first blush attempt to actually think about something besides profit. There's a lot more modern frameworks that are worth exploring. I'd be happy to share you. But your question is really about, how do companies actually measure their impact? Which is like, just my life just keeps ending up being about metrics. But it's important because what you measure matters. Maybe you've heard this expression before. Okay. But I would say, I would frame the question slightly differently from at least the purpose of this lecture, which is that if you're designing a product for a business, and maybe you're really thoughtful and you're like, well, I want to think about how I exit this business. My goal with this business is to have Unilever buy me. Okay. Well, I don't have to figure out what metrics to use. I can go to Unilever's annual report, right? And they'll tell me all the metrics that they use because they're using them and reporting on them. We can discuss whether or not those are the ones that make sense or the ones they should be. But, a lot of corporates tell you what metrics they're using. So I would say the key consideration is really looking at the businesses you want to sell to, and maybe you have environmental or social benefits. You need to measure those benefits in the same units and methodologies that your customers want to report on. Does that make sense? So like, if Unilever is reporting in hundreds of thousands of meters of water saved per dollar spent, right? Then you need to also measure that in your product, so that when you try to sell to them, you can say, hey, look, like, oh, by the way, I reduce water, and here it's the same unit. So then the guy who purchases it, or the lady who purchases it, says, oh, that's great, because then I can put it in with the rest of our data. Right? So a lot of it is just aligning the work you're doing, preemptively collecting the information to what folks are already doing. There's also global frameworks, right? There's global frameworks like the ISSB, okay, which is the International Sustainability Standards Board. There's CSRD, which has all these metrics. Like, people have been talking about this for 2 decades. So part of it is just finding out what's out there, finding out what people are using, and then designing the activities of your business to collect that information so that you're prepared to give it to a potential customer so that you can amplify their efforts. On the philosophical question of are they the right metrics, we can discuss more later. Okay, I'm gonna pick on one more random person. Oh, where's my mic? Can I get the double mic? Oh gosh, which table is he going to? This table over here. Oh gosh, here we go. Do you have a question, comment, thought, reflection?
Okay, Matt, about the cash flow, right?
Yeah,
So
cash
for
flow.
cash flow modeling,
Yeah, cash flow modeling.
if okay, sometimes we have profit, sometimes no, right?
Yes.
So how can we judge that it is safe enough to continue?
Oh, that's a good question. I would say in general, you won't have profit, to be honest. Startups rarely make profit. They make revenue, right? And so really what you care about is what's called your top line revenue growth, which is how much money you're selling. If you're an early stage company, you should be making zero profit, because every rupiah you make should be going into expanding your business. So no profit. Question of whether or not I should keep going when I haven't made a sale in 8 months and I have no money. I mean, that's an individual question, right? But in general, you should stop doing it faster if it's not working, and either do something different or stop entirely, right? The key is not holding on to one idea too long that's not working. But in general, if you're not seeing substantial sales within 6 to 12 months, you should stop. Like, within 6 months, many businesses can get pretty good sales. And if you're not doing that, it's because you need to go back to the market research, be more specific about who your customer is, how you're reaching them, and really assess if it's something people want or not. So change faster. Yeah. Fail faster. Yeah. If the reaction doesn't work, try a different reaction, right? Try 5 or 10 different reactions. And if you're not seeing revenue growth within 6 months or 12 years, more than 10 or 20% revenue growth, then I would stop. Yeah. Okay. Thank you for the brave people that volunteered on the spot to answer questions. We want to make this session much more interactive. Um, so, all right. So now we'll talk. Can I get a time check? 30. Well, 30. Oh, great. We can really linger on the financial statements. Okay. So what is financial modeling? What does that mean? There's different types of financial modeling. You can think of it basically, you can have backward looking or forward looking. So that's a good place to start. Okay. So when you're looking backward looking, it's like, how much money have you raised? How much debt have you gotten? How many sales have you made? How much expenses have you had? When you think about forward looking, you're thinking about things like, how many sales will I have in the future? How much revenue will I make? How will my expenses grow? What assumptions am I making about how much of the market that I can capture, right? So there's a lot of assumptions there on the customers and the acquisition costs and the pricing. Okay, is the pricing fixed? Am I releasing new products? Am I changing my pricing? All these things you do a lot of simulations around. Okay, but the uh, the big thing on cash flow management is to create a budget and stick to your budget, right? Every month. Who has a budget in their personal life? Yes. Good work. Nice cash flow management. It's helpful, right? Yeah, it's super helpful. Otherwise, you end up with no money at the 20th of the month every month, right? Does that, does that happen to anyone? Yeah. Happens to businesses too. Businesses without budgets, right? And it's okay to miss it one month or the other, but you should make a budget, spend according to your budget, and then track it and be like, oh, was I 10% above or 20% below or what happened on each little expense? That will give you a lot of insight to the cash flow management. A lot of companies don't even have a budget, but they come to me and they want $300,000 of investment. Like, come on, it's not, doesn't work. Um, so, and then you can actually, this idea of your planned versus actual allows you to calculate the error, the difference between your predictions, and change future spending, maybe make more investment, less investment. But it also tells you when you're going to run out of money. Okay. So when you're, when you're in a startup, you have very low amount of money, right? You might have 10,000 in the bank. That's supposed to last you all year. Okay. So you're like, I can't spend more than 1,000 a month. Okay. That 1,000 a month, how much you spend every month is called your burn rate. Okay. So in the entrepreneur world, it's called burn rate because it's how much cash you're just throwing in a big pile and lighting on fire and burning up. Right. Because generally startups don't make money. So all the money you spend is a loss. Okay. So you got to be really mindful about how much you're burning. Okay. Burning then translates to how many months do I have left? Well, if I have 10,000 in the bank and I'm burning 1,000 a month, I have 10 months left, right? That 10 months is called your runway. Okay. Runway, like a plane, it's like the plane has to be a certain, or the runway has to be a certain length, right? You don't want a runway that's too short, right? Why not? That's an easy one. Yeah, yeah, maybe it won't take off, right? Like it won't get enough speed to actually go in the air. Okay. That's what businesses need. They need to burn a certain amount of money for a certain time until they can find the right product market fit with the right customer and generate enough revenue so that they can start to scale. So that's where things like budgeting, tracking actuals versus predicted, adjusting it every month really come in hand. And then in terms of cash flow management, as you get a little bigger, you negotiate with vendors. Okay. And you can maybe change your payment terms. You can change your pricing terms a little bit. Just because someone gives you a contract doesn't mean you have to take it. You can negotiate a little bit. Don't negotiate too much. Typically, you have one round. So find out what matters, what doesn't. For early stage companies, it tends to be around payment terms. So typically, people want to pay you like on a 90-day cycle, right? So you might make a sale and you're like, yeah, I made my first sale. Like I've extended my burn rate. But if they pay you, they don't pay you for 3 months, you might still go out of business before you even get that money, right? So you want to push the time of your invoicing, your accounts receivable down. And then on the other side, when you have people you pay, you want to push it up. And uh, like maybe they say, oh, you got to pay in 30 days. And you say, oh, actually, I'm going to pay in 2 months. Okay. Balancing that out, negotiating that will help you also manage your cash flow. You might not always win, but for some reason these periods. Okay. Anyway, I don't know what happened. Like a lot of my periods disappeared. Okay. So these are two good resources if you want to learn how to do financial models. This website, asimplemodel.com, will like walk you through how to make a financial model. Very useful. And then if you want to get super technical on modeling and like do complex transaction grade models for $100 million projects, this website edbodmer.com has like such an incredible collection of videos and models that have been used on real deals. So if you actually want to see what finance is really like, go to his website and look at some of those things. I can't believe he has that all for free. It's like a gift. It's sometimes just people do the right thing. This guy really did. All these models have been used in real deals, big, huge deals. So if you want to go really big, then go check that stuff out. All right, so there are 3 things that you'll have to be able to at least understand what they are and talk about them as business owners or partners or people that startup founders. There's the profit and loss statement, also known as your income statement. There's the balance sheet, and then there's the statement of cash flows. Okay. So publicly traded companies in Indonesia every quarter need to file all 3 of those documents and have them publicly available and audited by investors. Okay. Generally under what's called GAAP accounting. But the point is that those documents will tell you everything about a company. You can have all the poetry of all the annual reports and all the meetings, but when it gets down to the brass tacks, when stuff gets real, is show me your income statement. You can't hide it. And we know you're using the same metrics, you're using the same methodologies as every other company on the market. That's regulated by law. And if people change or they don't include something on their income statement or their balance sheet, they go to jail, actual jail, right? White collar crime. Okay. Typically what that means is they change something or don't include something on their profit and loss statement in their filing to the regulators. Okay. So it's a real deal. It happens a lot. So this is a very simple income statement. Do not be afraid of this. It's okay. It's totally fine. It's okay. Chemistry is way harder than this. Okay. Seriously, you can teach chemists and engineers finance. You cannot teach finance people chemistry and engineering. Okay. I don't know what that tells you, but all right. So top line, people will say this a lot. Top line, always at the top line is revenue. Okay. Total sales. What's cool about this version is that it also has metrics underneath that help you interpret it. That's really useful for business owners and also for, sorry? Oh, and also very important for investors, right? Because these numbers don't really mean anything, really. What people care about is the change, okay? Which is kind of cool because it's like also like science, right? It's like a derivative of time and there's the delta, right? That's what's really important. So top line revenue, I increased by 12% between last year and this year. That's good. So when an investor asks me, how's your revenue? What's your top line revenue growth for 2022? I can say, well, it was 12%. They're like, that's great. I was expecting that. That's nice. Thank you. You should know that if you're a founder. And if you don't know that and you're talking to an investor, they will never talk to you again because you're totally clueless and they don't want to lose their money, right? So it's hard, but it's real. You know, things are real. Things get real sometimes. Next, you have costs. So you're talking about your cost. This is your cost of goods sold. This is also what's known as your variable costs in finance. So your variable costs change based on how many units you sell. Okay. Then you have your gross profit, which subtracts those two. Next, you have something called your operating expenses, which are your fixed costs, things that cost the same every year. Maybe you rented an office for a year. That doesn't change, right? It doesn't matter how many units you sell. You have to pay that. Your insurance costs, it's the same every year, regardless of how many units you sell, okay? Underneath that, you have something called EBIT, which is your revenue minus your cost. There's a lot of acronyms in finance, okay? Like, don't be afraid. There's a lot of acronyms in chemistry too, right? Going down, you have interest, right? Interest, if you have debt, a loan, you pay a certain amount of interest every year. Then you have your pre-tax income, right? Which is what you have before taxes. And then you have your taxes you have to pay. And then you have your net income, okay? Then you have these other funny, magical accounting things that are called depreciation. Is anyone brave enough to answer what depreciation is? No? Okay. Depreciation is like things get less valuable over time. So when you buy a laptop, it costs like $1,000, $1,000, but like then in 5 years, for some reason, it's only worth 100. That's depreciation. And in the tax code in almost every country, you can write off, you can that $900 loss, you can actually take out of your taxable income. Okay. There's also something called amortization, which is like long-term expenses that are planned in advance that you spend a certain amount of every year. Don't really have to think about that stuff so much. But what does matter is something called EBITDA or EBITDA, depending on what business school you went to. But EBITDA is an acronym that stands for earnings before interest, taxes, depreciation. I heard a lot of murmuring, like people knew that or had heard that. Oh, earnings before interest, taxes, depreciation, and amortization. EBITDA is really useful to investors. So if you're talking to investors, they'll be like, okay, what's your EBITDA? And if you don't have an answer for them, again, they're not going to talk to you again. All right. Because that's something a founder should know off the top of their head. And any founder in any company should know just a few things. Okay. Their unit economics, their burn rate, their runway, their EBITDA, their revenue. If you know that stuff, you're fine. But if you don't know that stuff, again, you really shouldn't be talking to investors. It's like, I don't know, in the US, we have an expression. I don't know if you don't bring a knife to a gun. Is that what it is? Anyway, don't come in underprepared. Right? You should be ready. I guess they don't say that in other countries. Okay. 10 minutes to go. We're gonna yeah, go ahead.
I was wondering, where's the depreciation numbers come from? Is it by based assumption or?
It's very complicated. Depreciation.
Okay.
Very complicated. Your accountant will tell you. Okay. Don't worry about figuring that out. That actually is complicated. Not worth it. All right. Here's a balance sheet. Okay. And a balance sheet is a little different than an income statement because an income statement tells you like it's like the flux, right? It's like the rates of change, rates of change. The balance sheet is like a snapshot of everything that's kind of like cutting in and out. Maybe it's a little switcheroo. Okay. So a balance sheet basically says two things: assets and liabilities. All right. So a balance sheet is from an equation that says assets equal liabilities. So your assets are all the cash that you've come in, anything you purchased and is sitting in a warehouse that's waiting to be sold, any expenses you've paid, and then there's your depreciation as well, and that's your assets, right? So I have 25,000 in cash and or 15,000 in cash, and I have some depreciation. And then next year I have a little more cash. There's a change, okay? But again, the balance sheet is like all of the stuff that you have that's worth money. And then your liabilities are basically everything that you owe, right? So, well, where did that money come from? You know, well, some of it came from a credit card, some of it came from an investor, some of it came from a grant, okay? And so these are your liabilities. This is debt, right? This is some of the money you owe, your credit card, maybe the bank loan. And then you have some investors, they put in some money. And then basically you have your assets, you have your liabilities, your equity, and these things equal each other. They balance it out. So I had 25,000, 25,000, 29,000, 29,000. Okay. That's a balance sheet. Again, you just have to be familiar. These things aren't that complicated. They just use some unfamiliar words, but there's not really complicated math in any of this. Yeah. Oh, yeah. Can we? Yeah.
But in essentially, what does it show or what does it represent?
Yeah. Okay.
EBITDA?
Yeah. So EBITDA, in a way, is earnings before interest, taxes, depreciation, and amortization. Okay. That if you think about what that means, you're not paying taxes, you're not looking at interest. It's stripping out a lot of things that are super subjective and just basically looking at your revenue minus your costs, right? And that's very comparable. Like investors can compare that to comparable businesses in the same sector. So like what was the EBITDA growth of a company that makes soap in Indonesia? And I want to compare five of them. Like it takes away, well, they bought a bunch of stuff and they're depreciating a lot of stuff. So a lot of the other things are like distorting the comparison. And it's a very simple way to compare businesses in the same sector, in the same geography, or it's a good way to compare businesses even in different sectors fundamentally. And EBITDA in general is like more specifically for, let's say, bigger companies like private equity scale companies. Early stage companies really will care about top line revenue growth. Okay. Because you're not going to have any profits for at least 3 or 4 or 5 years if you're running a venture business. It's different. If you have a different style of business, which is totally okay, you might. But a venture business is designed to scale. So you burn a lot of cash. I promise you're going to make a lot more later. So ventures tend to care about top line revenue. Did your revenue grow by 10% last year, 50%, 100%? Venture typically expects 100 to 200% revenue growth per year. If you're not getting that, you won't be able to get venture money. So I guess it's a way to compare businesses, and EBITDA is really useful because it strips out policy, it strips out changes of interest rates, it strips out equipment purchases, and just gets down to like how much you sold, how much it cost.
Okay. Is it purely comparative value, or is there any kind of common reference to say that the company is healthy or the startup is doing fine? Or
There's not like an independent test. How people use it is they compare it to comparable companies. So in the finance world, like if I'm doing a deal and I'm thinking about buying an Indonesian soap company, I'm looking at your company, but or investing in one, right? I'm going to say, okay, find me 5 comps and look at their income statement and their balance sheet and their EBITDA, and let's see if it's how yours compares. Yours might be way better than all your competitors, then you're more attractive. It might be exactly the same. And then it's like, okay, well, why am I buying you and not one of your competitors? Then you have a different argument. So it's used in comparative purposes. Okay. Yes? Huh? Ham industry. Home.
Small industry that the income to get the investor, like
Um,
EBITDA, like that.
yeah, I mean, again, if small to medium enterprises want to get investors, they need to have all of these documents made and they need to be created by standard practices. That's the first step. So if they want to get investors, first you have to make an income statement and a balance sheet first. Then you need to say, okay, remember I had different types of money for different types of purposes. How is my like what is the change on all these different things? And does that make sense for venture? Does that make sense for grants? Does that make sense for a bank loan? Once you have this information, then you can figure out which investor to go to.
Matt, maybe I would like to continue the question from Mas Yudis. I mean that for the SMEs, home industries or startup company, for the first year, I think they don't have this data. Maybe they will go to the pitching session to the investors or the Ventura Capital or like that. So I think I would like to agree more to provide the business plan instead of this fundamental report like this or financial report, because I think SMEs will not have this data so much, especially for the first year. And I think business plan is more powerful and maybe assisted by the Osterwalder business model canvas combined with the business plan, how to dig the revenue like that instead of this fundamental financial analysis.
Sure. Sure, sure. Yes, 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 and an SME is not a startup, right? Those are two different types of businesses. Typically, an SME has been operating for several years already, right? A small to medium enterprise exists already. It might be a small farmer, it might be a shop, but like they have been buying and they have been selling things for multiple years already. So they do have this information, or they might not have it. But fundamentally, that's different than a company that has never sold a product, right? So there's like different stages of a business growth. So like before a business exists, okay, now it's an accelerator. You don't have any of this information. You rely on a business plan, but you're still making financial projections. So you're still saying in the next 5 years, here's how much what I think my costs are. Here's how much I think my revenue will be. You still have to do that in your business plan, right? So you still have fundamental financials in a business plan. They're just projected and not actual. And then once you launch your business and begin selling, then you start every year, you have the actuals versus your projections, and you actually see how close you get to your projections. Does that answer the questions a little bit? Yeah. So it's the 0 to 1, and it's just projections become actuals. And then you either hit your actuals or you miss your actuals, and then you refine your business model as a result. Okay. All right. Other questions? Up, time out. Okay. Time out. I'm time out. All right. Any discussions? Do we have time for discussions now, or what is it?
We do have some questions from the Zoom,
Okay.
but then I think we're gonna discuss them after our break session,
Okay.
because it's lunchtime now and there's
Okay.
like a prayer time.
Okay. All right. Cool. We'll take a break and we'll have lunch. When are we back?
We'll be back on 1:30.
1:30.
Yes.
Okay. All right. Keep your questions hot. Write them down. Ask your friends. Bring them back.
Thank you.